So today's topic is how do we develop our edge and trade differentiation. It is not only trade differentiation, it is also our investment differentiation as well. So whatever we talk in the community is goes hand in hand for both traders and investors. As I told you, each one of us have to find our own, own way, and don't need to kind of copy anyone or like for example, I personally tell that please don't copy my exact way of doing things. Maybe you can take the structure and build it as per your requirements. So today we will go deeper into this, and I'll try to give you a simple way, and what are the different areas you should focus on if you want to find your own edge and you want to create your own customized approach towards this particular skill. Yeah. The first one is, of course, why this edge matters. The edge, why it matters is, if there is no edge, you will be only getting random results. And none of us want some random results. We want consistency. And this consistency is possible only when we find our own edge. And when we have this consistency, automatically confidence will start building up. And this edge stop you from chasing different approaches, different strategies, different indicators, different things and all that. You will be able to pick and choose what suits you, and that is what is actually finding this edge means. Once we know what is the edge we are looking for, the next step is to identify your own strengths. Now, what are these strengths and what is that we want to do? Now, these strengths are these things. Like, for example, the first strength, what you need to find out is what is your risk appetite? Whether you are a conservative or whether you are aggressive or you have been passive. Even that is also actually important. As I mentioned in the podcast today, taking no risk is actually the biggest risk what you are taking. Being passive is also very dangerous. Like for example, what I mean to say passive is, if you haven't started investing, if you haven't started building a corpus, that is the biggest risk what you are taking, which is whether you are conservative or whether you are aggressive. The second thing what you need to find out is what is the time availability. Like for example, I know most of you are going to office, and you have your other things, other commitments and all that. You need to pick how much time you are able to give for this. So based on that, you can choose the style, whether it is an intraday, whether it is a swing or whether it is a positional type of trading. Now, intraday is very short, half an hour, 1 hour, 2 hours, and it is done. Swing trading is again, the same thing. Maybe, couple of, 10, 5, 15 minutes to decide your entries and then hold your position for maybe, 4 or 5 hours before the end of the day or at the most the next day. Positional is when you take the entry and hold it on for 3, 4 days, 5 days, 1 week, 10 days. But you are just holding, you are not doing anything. You don't have to give your time as such. Time is actually required only to do the analysis and take your entries. After that, you just let it run. And the third point here is, what do you give importance to? Whether you want it to be an, stress-free, easy-going approach, or you are somebody who likes speed. You want, to go in fast, come out fast, that kind of thing. And also, what is your, strengths as far as your analytical skills, whether you are good in pattern recognition. And if you are good in pattern recognition, whether you are a trend follower or you like to go in the opposite direction, because see, when it falls, it's like gravity, it falls fast. Okay, so these are the couple of points which we should always take into consideration when we are identifying our strengths. Now, you have to match these strengths with the different market conditions. So there are only 3 market conditions. There is no other market condition which is available. Okay, so based on this, you should be able to match your strengths with what are those is, as I say, is, when it is a trending market, you will be concentrating on something called as a momentum setups. Like for example, it is giving you in a single direction, you'll just follow the momentum. And if it is a sideways market, okay, if it is a sideways market, it is actually within a range. So what you can do is you can go long when it comes to the bottom, and you can go short and when it comes to the top. So within that, you can, take your place. That is your sideways. And when there is very high volatility, of course, you can focus on these breakout trades. And when it is low volatility, again, you can do this range based trading. So these are the different market conditions, and this you should match to your strengths. Once we do that, we need to do is build our own setup. Now, I have done this so that all of you can take the benefit, where you know that the AASK methodology, which I have developed. Now, the point here is, now this AASK methodology can be used by anyone. Now, if you look at this AASK methodology, what we have done, we have defined a certain basic core tools which we use. There is very specific entry conditions. Only when it meets a certain conditions, there is this one. And there is exit condition also is defined. Like for example, we always define that, okay, not more than 1% of the invested capital is our stop loss. And the target is always minimum 1:2 risk reward. So this is a broad guideline. And if you can see, it is actually very, very simple. And it is something which can be repeated over and over again. So this is what is, build your own setup. In the sense, you can use this, our tools, our entry logics, our exits, and, position management and all that, and build your own system as per your likes and your convenience. And it should match with your strengths. Now, once we have built that setup, what we need is that, that how we can make it ours completely. Now, this is not about, just, this is like, don't follow the crowd, as they what they say, right? So don't ever, think of, copying it, or, run, as they say, right? As I keep telling, don't chase the holy grail strategy. There is nothing like that. So don't copy, adapt to what feels natural to you, your personality, and your requirements. And of course, when you start noting down things, noting down your traits, as they say, anything which can be measured can be improved. So this journaling is actually giving you that edge, wherein you do your analysis based on data, not based on your feelings. And that is the biggest reason why everybody is struggling, is because they always are dependent on somebody else's opinions. They go and ask, okay, what do you think I should be doing? Don't do it. You have all the answers within. Go within. Find it out yourself. And of course, the confidence comes from, as I keep saying, if you want to learn swimming, you have to get into the swimming pool. You can't sit at the sideline and say, okay, I'll do paper trading and I'll build my confidence. It doesn't happen. Sorry. Yeah. How many of you agree with me? Yeah. Because, when you do paper trading, simple thing, it doesn't have that emotion there, because real money is not there. You can do paper trading for, multiple years. But the real thing, like, what Avinash was sharing such some time ago, is when you come into the real market. And when you come into the real market, as he was mentioning, most of the people end up, they become greedy, right? So that is the point. So, this paper trading and all that. And this confidence comes by testing the waters yourself, testing it in real world scenario. So that is why the best thing to do is start small. Don't take, get in with bring in some huge capital and, risk it. I will not, never tell you to do that. Start small. Start small, start building your system, start applying it, start getting the results, go over the data, find out where you are doing wrong, and go on improving step by step. That will lead you to build confidence in your own system, and that will also help you create your own approach towards this. You don't have to, like, for example, I am comfortable with my option selling. Now, why I am comfortable with option selling is because that suits my personality. I am a person who doesn't like to rush through things. And if somebody forces me, rushes me and all that, I'm not in for that. Okay. I always want to take it. I'm not saying that I'm a very laid back person, but I don't like to rush things. Why? Because of the simple reason. When we rush through things, normally what happens is we miss out on certain important details. And trading is one such area where details are important. If you miss out identifying the right levels, if you miss out identifying the trend, if you miss out on defining your risk, if you miss out on defining your targets, it's a ready-made recipe for disaster. Once you start testing, that is where you will start building your confidence because of the results what you get. And this can all be done in real time only, not by doing virtual trading. Once we have all this, what are the outcomes which you can expect? The outcomes what you can expect is that you will have complete clarity. I will not even say more clarity. You will have complete clarity, as there will be no confusion in your mind. It will help you build discipline, which will help you from taking emotional trades in which there is no logic. There is, those are those situations where, okay, I feel like it is going to go up. Such kind of trades will completely be eliminated. And once we follow discipline, automatically consistency starts building up. And once consistency comes, scale up is not a big deal. And the biggest outcome of having an edge for all of us is that, we will not depend on any external factor for taking our decisions. It gives us unprecedented independence. So this is the outcome of having an edge. The final action plan for all of you. Since I have shared this whole thing, now I want all of you to please do these things to help you build your own, finding your own differentiating things and finding that edge in your own style of investing and trading. The first thing what you have to do is identify and write down what are your two top strengths as a trader and an investor. And based on the strengths, you can identify what suits which market condition best, and you draft a very simple setup. Rules for your entry based on what logic you will be taking your entry, and your exits. Exit is very simple. One is to do risk reward to start off with. That is your simple setup. And once you build this, test this for at least 2 weeks. 2 weeks or 10 to 15 trades. Test it. Let it be at a small position size, but test it, because testing it is what is going to give you that confidence. Okay. Just putting it on paper is not going to make a difference. Okay. So these are the action plans, and I want all of you to please give it a try. And of course, come up with your own edge for your own trading style.